Have you ever wondered why the IRS charges penalties and interest on unpaid taxes? Today, we're diving into the reasons behind these extra charges. Understanding the IRS's approach can help you avoid unnecessary costs and stay on top of your tax responsibilities. Let's start by exploring the basics of what penalties and interest are and why they're such an important part of the tax system. By the end of this video, you'll have a clear picture of why these charges exist and how they impact taxpayers. IRS penalties are additional charges that the Internal Revenue Service imposes when taxpayers fail to meet their tax obligations. These can include filing late, paying late, or making mistakes on tax returns. The penalties are designed to encourage compliance and ensure that everyone follows the rules. They serve as a reminder that meeting tax deadlines and providing accurate information is crucial. Without these penalties, there would be little incentive for taxpayers to file and pay on time, which could disrupt the entire tax system. Interest is another charge the IRS applies when taxes aren't paid on time. Unlike penalties, which are often one-time or monthly fees, interest continues to accrue until the tax debt is fully paid. The IRS charges interest to compensate for the time value of money, essentially. The government loses out when it doesn't receive funds on time. This ongoing charge motivates taxpayers to pay their debts as quickly as possible, minimizing the cost to both the taxpayer and the government. The main purpose of IRS penalties is to encourage taxpayers to comply with tax laws. By imposing financial consequences for late or incorrect filings, the IRS creates a strong incentive for individuals and businesses to meet their obligations. This helps maintain the integrity of the tax system and ensures that everyone pays their fair share. Without penalties, there would be little deterrent against ignoring tax responsibilities, which could lead to widespread noncompliance. Interest serves a slightly different purpose than penalties. While penalties are meant to punish or deter, interest is primarily about fairness and compensation. When taxes are paid late, the government misses out on funds it could have used for public services. Charging interest ensures that late payers don't get an unfair advantage over those who pay on time. It also helps the government recover the value lost due to delayed payments. There are several types of penalties the IRS can impose. The most common include the failure to file penalty, the failure to pay penalty, and accuracy-related penalties. Each type targets a specific kind of noncompliance. For example, filing your return late triggers one penalty, while paying your taxes late triggers another. Understanding these distinctions can help you avoid unnecessary charges and stay compliant. The failure to file penalty is charged when you don't submit your tax return by the deadline. This penalty is usually higher than the failure to pay penalty, reflecting the importance the IRS places on timely filing. The penalty is calculated as a percentage of the unpaid taxes for each month the return is late, up to a maximum limit. Filing on time, even if you can't pay right away, can help you avoid this extra cost. If you file your return but don't pay the taxes you owe by the deadline, the IRS charges a failure to pay penalty. This penalty is generally lower than the failure to file penalty, but it still adds up over time. The penalty is based on the amount of unpaid taxes and accrues monthly until the debt is paid. Paying as much as you can by the deadline can help reduce this penalty. Accuracy-related penalties are imposed when a taxpayer makes significant errors on their tax return, such as underreporting income or claiming deductions they're not entitled to. These penalties are meant to encourage honesty and accuracy in tax reporting. The IRS wants to ensure that everyone pays the correct amount, and these penalties help deter intentional or careless mistakes. The IRS calculates interest on unpaid taxes based on the federal short-term rate plus an additional percentage. Interest starts accruing from the original due date of the return, not from when you receive a bill. This means that even if you file for an extension, interest will still accumulate on any unpaid balance. The rate can change quarterly, so it's important to check the current rates if you owe taxes. While both interest and penalties increase the amount you owe, they serve different functions. Penalties are designed to punish or deter specific behaviors, like late filing or underpayment. Interest, on the other hand, is simply a charge for using the government's money past the due date. Understanding this distinction can help you prioritize which charges to address first if you're facing both. The IRS's ability to charge penalties and interest comes from federal law. Congress has given the IRS the authority to enforce tax compliance through these financial measures. This legal backing ensures that the tax system operates fairly and efficiently, with clear consequences for noncompliance. The rules are published and accessible, so taxpayers know what to expect if they miss deadlines or make mistakes. One of the IRS's main goals is to encourage voluntary compliance with tax laws. By imposing penalties and interest, the IRS motivates taxpayers to file and pay on time without the need for costly enforcement actions. This approach helps keep the tax system running smoothly and reduces the burden on both taxpayers and the government. Penalties and interest also protect government revenue. When taxpayers delay or avoid paying taxes, the government has less money to fund essential services like education, healthcare, and infrastructure. These charges help ensure that funds are available when needed, supporting the country's financial stability and public programs. By imposing financial consequences for non-compliance, the IRS discourages tax evasion. The risk of facing penalties and accumulating interest makes it less attractive for individuals and businesses to ignore their tax obligations. This helps maintain a level playing field where everyone is expected to contribute their fair share. Interest charges act as a deterrent against delaying tax payments. Knowing that the longer you wait, the more you'll owe, encourages taxpayers to settle their debts promptly. This ongoing cost can quickly add up, making it financially wise to pay taxes as soon as possible. In some cases, the IRS offers penalty relief for taxpayers who have a valid reason for missing deadlines, such as serious illness or natural disasters. This relief is not automatic. You must request it and provide documentation. The IRS reviews each case individually, considering the circumstances before waiving penalties. The IRS may grant first-time penalty abatement to taxpayers with a clean compliance history. If you filed and paid on time for the past 3 years and have not previously received abatement, you may qualify. This policy encourages good compliance habits and offers a second chance for honest mistakes. Reasonable cause relief is another way the IRS can waive penalties. If you can show that you exercise ordinary business care and prudence, but were still unable to comply, you may qualify. Examples include serious illness, natural disasters, or other circumstances beyond your control. Documentation is key when requesting this relief. Unlike penalties, interest on unpaid taxes is rarely waived. The IRS generally requires all interest to be paid, even if penalties are reduced or removed. This policy ensures that the government is compensated for the time value of money and maintains fairness among all taxpayers. The best way to avoid IRS penalties is to file your tax return on time and pay any taxes owed by the deadline. If you can't pay the full amount, pay as much as possible and contact the IRS to discuss payment options. Staying organized and keeping accurate records can also help you avoid mistakes that lead to penalties. If you can't pay your taxes in full, the IRS offers payment plans and installment agreements. Setting up a payment plan can help you avoid additional penalties and reduce the amount of interest that accrues. It's important to contact the IRS as soon as possible to discuss your options and avoid further complications. Tax professionals can help you navigate IRS rules and avoid penalties. They can assist with filing, payment plans, and requests for penalty relief. Working with an expert can give you peace of mind and ensure you're meeting all your tax obligations correctly. Some common mistakes that lead to IRS penalties include missing deadlines, underreporting income, and failing to keep proper records. Double-check your return for errors, and make sure all information is accurate. Taking the time to review your tax documents can save you money and stress in the long run. If you receive a notice from the IRS about penalties or interest, don't ignore it. Read the notice carefully and respond promptly. The IRS provides instructions on how to address the issue, whether it's paying the amount due, requesting relief, or correcting an error. Open communication can prevent further problems. If you believe a penalty was charged in error, you have the right to appeal. The IRS has a formal process for reviewing appeals, and you can present evidence to support your case. It's important to act quickly and provide all necessary documentation to improve your chances of success. Unpaid taxes, penalties, and interest can have a serious impact on your finances. The IRS can place liens on your property, garnish wages, or take other collection actions. These consequences can affect your credit score and financial stability, making it even more important to address tax issues promptly. If penalties and interest remain unpaid, the IRS can take collection actions to recover the debt. This may include levying bank accounts, seizing assets, or placing liens on property. These actions are a last resort, but they highlight the importance of resolving tax debts as soon as possible. One important thing to remember is that IRS interest compounds daily. This means the longer you wait to pay, the faster your debt grows. Even small amounts can balloon into large balances if left unpaid. Addressing tax debts quickly can save you a significant amount in the long run. The IRS adjusts its interest rates quarterly based on the federal short-term rate. This means the amount you owe in interest can change over time. Staying informed about current rates can help you estimate your total liability and plan your payments more effectively. When the IRS assesses penalties or interest, they send a formal notice explaining the charges. The notice will detail the type of penalty, the amount owed, and instructions for payment or appeal. Reading these notices carefully is crucial to understanding your situation and taking the right steps. The IRS offers online tools to help taxpayers understand and manage penalties and interest. You can check your account balance, set up payment plans, and access resources for penalty relief. Using these tools can make it easier to stay on top of your tax obligations and avoid further charges. If you have questions about penalties or interest, the IRS provides customer service by phone and online. Representatives can explain your charges, discuss payment options, and guide you through the process of requesting relief. Don't hesitate to reach out if you need help understanding your situation. Taking timely action is the best way to minimize penalties and interest. The sooner you address tax issues, the less you'll owe in the long run. Procrastination can lead to mounting charges and more serious consequences, so it's important to act quickly when you receive a notice or realize you owe taxes. While no one likes paying extra fees, IRS penalties and interest are necessary tools for maintaining a fair and functional tax system. They encourage compliance, protect government revenue, and ensure that everyone contributes their share. Understanding why these charges exist can help you avoid them and stay on good terms with the IRS. Tax compliance refers to the act of following all tax laws and regulations, including filing returns and paying taxes on time. The IRS relies on voluntary compliance to keep the tax system running smoothly. Penalties and interest are tools to encourage this behavior and ensure fairness among all taxpayers. The time value of money is a financial principle, stating that money available now is worth more than the same amount in the future. The IRS charges interest on unpaid taxes to compensate for this lost value. This ensures fairness and encourages timely payments. Penalty abatement is the process by which the IRS removes or reduces penalties for qualifying taxpayers. This can happen if you have a good compliance history or can show reasonable cause for non-compliance. Understanding abatement options can help you manage unexpected tax issues. The IRS collection process involves a series of steps to recover unpaid taxes, including sending notices, assessing penalties and interest, and taking enforcement actions if necessary. Understanding this process can help you respond appropriately and avoid more serious consequences. Federal tax law is the body of rules and regulations that govern how taxes are collected and enforced in the United States. The IRS operates under this legal framework, which gives it the authority to charge penalties and interest. Knowing your rights and responsibilities under federal tax law is essential for compliance. Voluntary compliance means taxpayers fulfill their obligations without direct enforcement, while enforced compliance involves IRS actions like penalties, interest, and collections. The IRS prefers voluntary compliance, but uses enforcement tools to ensure everyone follows the rules. Payment plans, or installment agreements, allow taxpayers to pay their tax debt over time. The IRS offers these plans to help taxpayers avoid additional penalties and manage their finances. Setting up a payment plan can be a practical solution if you can't pay in full immediately. Reasonable cause is a valid, documented reason for failing to comply with tax laws, such as illness or natural disaster. The IRS may waive penalties if you can demonstrate reasonable cause. This concept ensures fairness for taxpayers facing genuine hardships. Taxpayer rights include the right to appeal penalties, request relief, and receive clear explanations from the IRS. Understanding your rights can help you navigate the tax system and address issues more effectively. To sum up, the IRS charges penalties and interest to encourage compliance, ensure fairness, and protect government revenue. While these charges can be frustrating, understanding their purpose can help you avoid them and manage your tax responsibilities more effectively. Remember, timely action and good record keeping are your best defenses against extra costs. Stay informed, stay organized, and you'll be well equipped to handle your taxes with confidence.